Hi guys, thanks for tuning in to another episode of Nuggets News. Today we've got a very special guest and one of my investing heroes, and that's Raoul, the CEO and founder of Real Vision. How you going?
Oh, great. Thank you. Great to speak to you.
Yeah, I'm looking forward to diving into a range of topics today, and you guys have done a great job over at Real Vision, educating a lot of people. So for those that haven't followed you, what's your quick background and what does Real Vision do?
Yeah, my background is I've been at the heart of the financial system. So I was working for numerous investment banks. Goldman Sachs is where I spent a large part of my career, where I started and ran the hedge fund sales business in equities and equity derivatives. Then I went to our largest customer, which was the biggest hedge fund firm in Europe, GLG Partners, where I started and ran the global macro hedge fund there. And then at the age of 36, I opted out of the rat race, moved to the Mediterranean coast of Spain, and started writing investment strategy and research, which I still write to this day, called Global Macro Investor. And some 4.5 years ago, I started Real Vision with three other co-founders. And that's basically the Netflix of finance. What we do is we realize that some people had all of the information in the finance industry, and there's a whole bunch of people, which is i.e. everybody else, doesn't. And we thought we can change that because we have a lot of access, because we kind of know everybody in the industry from having been in it for 30 years. And we thought, okay, what we were going to do is make that kind of level of information available for more people, make it for everybody. So it's a subscription business. So it's $180 a year. It's very cheap. That's US dollars. And then what we do is we have the world's most famous hedge fund managers, analysts, strategists, all on the platform, talking openly, in depth about what they think, what they do, how they think about risk, what the opportunities are, all of that stuff. So it's an incredible, incredible experience. You kind of feel privileged to be sitting in on some of these conversations. And we've also just launched a free version, which is called Real Vision Free, oddly enough, which is realvision.com/free. So you can just check it out from there.
Yeah, and you guys produce plenty of free content on YouTube as well, obviously.
That's right. So there's, again, realvision.com/YouTube. You can find it easily there.
And I think what a time to be alive. The stock market, the macro environment, everything has just changed so much lately. We had Roger Montgomery on the channel recently, who's a real value investor in Australia. And I think it's that value investor and valuing stocks that's kind of gone out the window a bit since the GFC and money printing, hasn't it?
You know, I'm not sure whether that's just not the cycle. So I remember really well how much this reminds me, for example, of 2000. So don't forget, in 2000, the most famous hedge fund manager in the world at the time was a guy called Julian Robertson. Julian Robertson basically was a stock picker, a value investor who used top-down macro overlays, both of which stopped working in 99 and 2000.
Yeah.
So yes, value doesn't work right now, and it doesn't work for several reasons, but most of the reason is the sheer wall of money going into index funds.
Yeah.
So that there is nobody actually making the choice of growth over value. They're just saying market, buy the market in the weighting of the S&P or whatever ETF you're buying. And that's creating a huge distortion. But we kind of know that when things turn around, it actually turns around the other way. And there's no natural sellers of the value stocks, but there's huge natural sellers of the indices.
Yeah, and I think this is the dichotomy that we're in with central banks, where they've promised everyone that they're going to return to some sort of normalcy, and people have been forced to chase more risky assets and follow yield and put money into these ETFs and so on. And I think for the first time, people are realizing that they might have been bluffing, that we might not get back to this 2-3% growth environment, and that we might need QE and lower rates for longer, and we see all this negative yield around the world. So what do you think about all that?
Well, I think this is one of the reasons we actually set up Real Vision, is because there are truths and there are false narratives. And the false narrative is the narrative of hope. It's the narrative that you will make enough money to retire on. Just give it to the guys on Wall Street. They'll invest it. They'll make sure that your savings grow enough. The reality is, if you look at GDP growth, let's say take the US, for example, it's actually been stepping down every decade for the last 5 decades.
Yeah.
And the average guy is earning less money, so they can't even save enough to retire. So the truthful reality is it's not there. And most of that's to do with the debt buildup. So as debt has increased and increased and increased to be so enormous now, it kind of restricts growth. And the second part of the equation is demographics. Young people and a young population buy things. You have to buy your first house, your first car, your first suit, your first whatever it is, but everything's new. the older you get, the more marginal a consumer you become. So you actually don't drive both prices like inflation, and you just spend less over time. So it dampens economic growth.
Yeah, and you guys talk a lot about those demographics, and if we go back a few generations, I think the figures are something like 5 workers for every 1 retiree. So we have this young working population that are all buying things, and they can manage to fund the retirement of that one person. And now that ratio is kind of getting, for the first time in history, we have more adult diapers than baby diapers. I love that statistic as a pharmacist. And we just can't simply, the math doesn't add up, does it? We can't pay for all these retirees. And at the same time, we've borrowed from the future more than ever. We've got debt for a car, our home, our student loans.
And this was all a false promise. So it really emanated from the baby boom generation. Coming out of World War II, there was certain things that were promised to them. And they were promised that there'll be free healthcare for all. That was a European, Australia, and a bunch of other countries had that. Now, that's a great thing, but it's very difficult to pay for. So governments have that problem coming. But on the private side, it was, don't worry, you don't need to be as austere as your parents who went through 2 world wars. We've got credit for you, and you can go out and spend, and consumption is good.
Yeah.
As opposed to their parents where consumption is bad, because they need to rebuild the global economy. So consumption is good was the big driver. So they gave them credit, and then they said, but you don't actually need to save as much money as your parents did, because parents, their parents, that war generation, they'd save 20% of their income. But they said, you guys, you don't need to do that. Just give about 5% to the guys in the finance industry, and they'll make you rich. And you can just spend the rest. So what everybody did was just lever up as much as possible and hope that their retirement savings would come good in the end. And that whole equation is just not going to work. And so therefore, who's going to support them? The state can't, for the reasons you point out. There's too many retirees versus the number of people putting money into the system. So the Ponzi scheme's been inverted. And they don't have enough savings themselves. So the only answer is they're going to have to spend less.
Do you think this is part of a cycle where, I talked to my granddad and he just, he couldn't fathom going into all this debt and so on. And now it's become the new normal where people don't even buy a TV or a car or anything with savings these days. It's all on debt. And do you think we're going to go back? And that's what we're seeing with millennials now with their sort of, disdain for banks and governments, and they want to take control of their future?
Yeah, I think the first thing you've seen with millennials is that I grew up in a world, I was an 80s child, and it was all about consumption, right? It was all about what car you drive, how big your house is, all of that stuff. And Australia's still in the grips of that right now, right? Because you've kind of had your 1980s moment in Australia. But the millennial generation has kind of rejected that. It puts value on other things. So that's interesting in itself. And the rise of cryptocurrency, which I'm sure we'll talk about later as well, is another one of these things where they kind of don't trust where this all is, because basically they were young and they saw their parents suffer a lot in the global financial crisis, and they want to do something about it. However, they're already straddled in debt. We gave them debt as soon as they came to university. So you've got a bunch of smart kids, and then you hinder them with enormous debts. So, that's a huge shame, because when I went through university, you were means tested. So if your parents could afford it, you wouldn't get a grant your parents would have to pay, or you get some split of it, or the government would pay for free education. But that's all gone, and it's all debt now.
Yeah.
And that was another thing that happened. One of the key things that happened in the early 80s in the UK that changed the world was Margaret Thatcher decided she wanted to turn these Labour voters into Conservative voters. So she thought, well, the best way is bring them into the financial economy. And they were all, the working classes in England were living in council houses, which were a product of after World War, because there wasn't enough housing. So they had these free council houses that they paid nothing to live in. But they said, the Conservative government said, we'll sell them to you at a ridiculously low price. But everybody took out a mortgage. So all of these creditors became debtors. Yeah. And so the debt culture exploded, and kind of that got followed around the world. Ronald Reagan kind of followed suit, and everybody else did the same.
Yeah, it's been pretty apparent in Australia as well. The next thing I wanted to talk about was negative interest rates, and we see all these negative yielding bonds. I think the German bond just hit negative for the first time today as we're recording. But how do you explain this to people at home? It's still something that people that are going down the rabbit hole, they struggle to comprehend. They say, Alex, am I going to have a negative interest rate on my savings account, on my mortgage, and how does this all work?
The answer is we don't really know, right? So what they're trying to do is penalize people from holding cash. holding cash savings that are non-productive use of assets. Now, it might be productive for us because we want savings, but the central bank has decided it's non-productive for the economy, and we want you to instead spend your money. When all we're trying to do is not spend our money because we understand, people need to retire, so everybody needs their cash. That's the biggest driver of these negative interest rates. Yeah. So you've got the battle of the central banks. They're kind of trying to force you to spend money, but the reality is nobody wants to spend money because you really have to save for retirement because we've got this huge cohort of old people. So that whole dichotomy. Now, how it works, there's not many bank accounts that unfortunately pay you money for having a bank account. So we don't actually get the benefit of it either. So it's a bit of a screwed up way. But what is interesting is in Europe now, huge amounts of companies can issue debt and get paid to issue the debt.
Yeah, it is crazy.
Which is, I can't get my head around it, but this is what it is.
And it's just another thing. We will talk about cryptocurrency in a second, but there's savings accounts in the crypto world that are offering 10 to 8% annually. And that is just unheard of anywhere else. So I think there's so many reasons why people are going to turn to Bitcoin and cryptocurrency. But what are your thoughts on a step back and gold? And gold did lead a lot of people into that sound money way of thinking and then into Bitcoin later on. So how do you think gold plays a role in all this?
I think of gold. There's a lot of the gold bug community will say, gold needs to be the reserve asset of the world's financial system. It's never going to happen. It's never going to go back to that. And I think cryptocurrency is one of the reasons why it won't. There are other ways of solving that. However, gold should be everybody's personal reserve asset. Yeah. There is a place for gold for everybody, because I look at gold against a basket of 27 world currencies, and it is an incredible store of value. It may go up and down against the Aussie dollar or up and down against the US dollar or the pound or whatever it is. But when you blend it across all of the currencies of the world, gold actually hedges very well against central bank largesse and all of the other issues in the world that we have. So it has a place. People realize that when we got to the brink in 2009, 8, that gold really had some sort of value. And I think now gold is basically an option on extreme monetary policy. And I think crypto is the same. So it's really interesting period of time last week and the week before when gold and crypto were screaming up together in a very correlated move, because people realized that the US central bank were going to cut interest rates, and once they start, they're probably going to zero. The ECB had already said, okay, we're going to have to do something. Now they've got negative interest rates and massive QE. So what the hell are they going to do? Yeah. And then we've got the BOJ, who haven't really stepped into the equation yet, but they own most of their own bond market, half their equity market. So what are they going to do? So if you think of that extremity, and I call that the end game, wherever we go to, whether it's a debt jubilee, something we can talk about later, gold and Bitcoin have to be an option on pricing that, because they are probably one of the better hedges.
Yeah, and in Australia, while gold has been trending down the last few years in US dollar prices, it's over $2,000 an ounce now here in Australia, and people see that, and again, it's just another piece of the puzzle where they start to ask, what is going on? And I made a video just yesterday about how low can interest rates go in Australia, because they're talking about another 2 cuts before the end of the year, so we might be at 0.5%, and we're not even in recession. It really worries me, like what on earth are they going to do in Australia if we do go into recession, as you say, similar in Europe?
Well, you kind of know what they're going to do, because we've seen, the BOJ have led the way, and everyone goes, well, we're not turning into Japan. Yeah, everybody is. It is incredible, because everyone's all the way fought the premise. They're like, no, we're smarter. No, the Japanese are really smart as well. But the problem is of debt and demographics this is the issue. You can't get out of it. So the Japanese have done the fiscal stimulus side. They've done the monetary policy. They've pinned the bond market at super low rates. They've cut rates to negative. They've done all sorts of things. And I think Australia will have to do the same, because you're going to be straddled with exactly the same issue that the Japanese and the Europeans and the US have, which is a banking system that's got too much debts in it, households overly leveraged, and an aging population. It's like, okay, well, how are you going to solve that?
Yeah, I'm not sure if you follow Steve Keen much, but he came on and we did an interview.
Yeah, he's been on Real Vision a few times.
Yeah, and it was called Turning Japanese, the interview we did about a month ago. So there you go. How do you think this plays out in terms of that debt jubilee, as you mentioned? And for people at home, that means that we've basically got to wipe the slate clean because everyone's in so much debt. All this sort of silent inflation, shrinkflation, just that slow eroding of purchasing power to pay down these debts and future promises.
The problem is I think the slow answer doesn't work, because you get crippled. Well, the Japanese have tried that. Okay, so that's been what they've tried. And what you get is your 3 decades so far of no growth and no inflation. And it's been really difficult to deal with. You can't reduce your debts fast enough. So what the government has to do is increase its debts because you've still got the burden of the the social security system and all those other things. So I think the Japanese are going to lead the way in what we call the Jubilee. And that is, by the end of it, by the next recession, what are the Japanese going to do? They've literally done everything, and they own most of their own bond market, and nothing went wrong. Nothing blew up. So they're going to be very tempted to say, well, why don't we just buy all of it? And then just say to the government, you're done. You don't have to pay that back. And then see what happens. Maybe even the government could buy all the debt off the banks as well. Maybe the whole lot. And you just say, fine, you're all done. There is no debt. Now, theoretically, it's now becoming apparent that that may be possible to do. And it may not blow up the bond market because obviously there's an infinite buyer of the bond market. Okay. And it's probably very good for the equity market because you've got rid of all of the debt. But you'll probably blow up the currency market.
Yeah.
So maybe dollar yen goes to 200 or 250. But maybe that's not terrible for an aging economy that needs to be competitive on the world stage. Maybe to wildly devalue your currency creates inflation internally. It creates low price to export goods. Maybe that would work. I think, in fact, it probably would. But it's going to break your system for a couple of years. But the other side of it is probably better.
Yeah, and can everyone do this at once? We saw Donald Trump tweet yesterday that this isn't fair, and Australia's already gone from $1.10 to less than 70. So it's the race to the bottom. And what does it look like if everyone does try to do this at once?
Well, I think they will. I think either the BOJ is going to do it first, and everyone's going to extrapolate, or somebody does it first, and then everyone says, okay, we need to manage this process. And this is where it starts to get interesting. And look, none of us know the outcome, so we could all pontificate all day. We don't know. Now, there's a whole bunch of people who say, well, they're going to go to gold, obviously. I don't think that's the case. Or maybe they're going to go to the SDR, the IMF version of a global currency. Well, that's not really a tradable currency for people. But I thought there's something really interesting happened last week, which was this Facebook currency.
Yeah.
And the reason being is, forget if it works or not, I don't really care. But what it did is showed that this is a basket, essentially, of all the world's currencies, including US dollars. So if you think of most currencies, if you think of the Australian dollar going up and down, it's basically a function of the Australian dollar and the US dollar. But if you neutralize both of them, because you're long both, well, it barely moves, actually. Mm. It may move by inflation or monetary printing, whatever it is, but you end up with a very stable thing. So there is a way of creating cryptocurrencies, whether it's at, let's say, IMF level, but there's no real reason to stop it being at Amazon level or Apple level, where you can have different versions of stable currencies that stable tokens that really work. So I do think that was for me, that was like a wow, okay moment, because it's very different to Bitcoin. Bitcoin has a different place. Bitcoin is rapidly becoming acknowledged as a store of value, a highly volatile one, probably because it's not reached its kind of full valuation. Yeah. But with these ideas of these large stable cryptocurrencies, stable coin ideas, well, there's something there for a future of the financial system where you could devalue everything against that and wipe off the debt and deal with it somehow within that. I don't know how that works. It's beyond my pay grade, but it's got to be something like this.
Yeah, one of our theses has been that every bank and corporation are going to launch their own stablecoin, and it's really started to play out this year with JP Morgan and now Facebook, and it's making people question, well, what is money and value? And the banks and the governments and central banks said, hold on, Facebook, like you can't just create your own currency. And it makes me wonder, it's almost like the escape valve if there's money that's siloing into Facebook coin, into Bitcoin, into gold, and the central banks almost have less and less control. Maybe not so much in the US, but in these other countries, Venezuela, Zimbabwe, they've got this option that's at their fingertips on a smartphone to vote out of their local currency. And I think people are starting to vote with their money. That's
right. But there's knock-on effects, as there always is, right? So it sounds like the great libertarian paradise of we've all got freedom of our own money. Yeah. Problem is I don't quite like the idea of corporations owning money either. Yeah. I mean, governments aren't great either. So, right, that's a conundrum in itself, which is why Bitcoin is very attractive, because it's not owned by anybody. It's decentralized. So, okay, so decentralization is really interesting. But let's say these things do take off and they start absorbing more of the world's money supply. well, what the hell happens? That is so deflationary. That is so growth contractionary that if people start piling out of the financial system, all the leverage is gone. Where is the collateral for the housing market and the loans and everything? That is a problem that nobody's thinking about. If this is successful, you're going to create an enormous problem. And again, these are transitory problems, but it could be of a huge order of magnitude.
Yeah, just to dive into that a bit further, even more so in this world of leverage in the financial system. Take Australia, for example, where everyone has their 5% down mortgages they're trying to encourage now. As soon as that collateral that's in the system gets slightly sucked out into something else, that's when things get nasty pretty quickly.
Yeah, exactly right. And, people didn't realize how bad things got in 2012. In Europe, the entire collateral of the system is government bonds. Now, we've not gone through a situation since we built all of this leverage that, there's 1 quadrillion of derivatives. The base of all of that is the government bond markets. And we were going to default on Italian or Spanish bonds in that environment and French bonds.
Yeah.
The system couldn't cope. I mean, that was literally going to be the end of everything, because then you've taken the collateral, the bit at the bottom of the pyramid, you've pulled it out. It's Jenga. You're taking out the bottom row. I mean, well, obviously the tower block's going to fall down.
Yeah, something we haven't talked about, which is probably in a similar vein of thought to Facebook coin and other competing currencies, is the mini bots idea that they floated in Italy the other day. So we're seeing these countries that are saying, look, we might issue our own form of currency.
I wrote an article about this, and I think this is all coming because there is the internet has led to tribalism. It's led to a very big splintering of ideas. Left and right get splintered apart, and everybody gets splintered apart. Also, countries do. So let's look at Catalonia and Spain. I lived in Spain for a long time. Catalonia is trying so hard to separate from Spain. Now, I think one of the obvious things that they will do is issue their own currency, because one of the things is the Spanish talk about how the euro is going to help it. But if they issue something that's their own, that's pegged to the euro, there's a meaning. Again, it could be a cryptocurrency, whatever. There's a very interesting way out to kind of prove their case. And in Italy, that's coming out as well. And it could happen elsewhere. So I think it's coming.
For people at home, I'd love to get your thoughts just quickly about the euro and how it might break up and whatnot, because it's very different a country like America or even Australia, when we have all the mining and resources in Western Australia and then all the housing market and business in Sydney and Melbourne on the other side of the country. But money goes from one to the other where it's needed, because we're all the same people and all that sort of thing. Whereas in Europe, there's a lot of cultural differences and a lot of history there. And did you see that fracturing in the future?
So interesting, because obviously I lived in Spain. Spain was one of the great beneficiaries of the euro and Europe. I mean, they went basically from a second world country to just the greatest country in Europe, really dynamic, exciting, with an enormous housing bubble to go with it.
Yeah.
But even when it all went wrong, they still love Europe. And most of the Italians still love Europe. But there is a tendency that they are anti-establishment now. That whole anti-establishment is on the rise. And they don't know what to lash out against. But Europe is not the primary thing they want to lash out against. It's usually their own governments. So I'm not sure how big the motivation is within Europe. But the financial system, well, that's a different issue, because you've got Deutsche Bank and Commerzbank look like they're going to go under. Yeah. You've got most of the Spanish banks look like they're going to go under. The Italian banks are in the process still of going under. I don't know how the system deals with this. And I think the introduction of Christine Lagarde into the ECB is telling you something. It's telling you that she is a lawyer and a politician. The IMF, what do? They negotiate settlements, And so I think the ECB, and I asked them specifically, I was hosting a Goldman Sachs macro event in London about a month ago, and I actually asked for the ECB to come along, and the Goldman guys managed to get the kind of one of the senior policymakers. And so I asked her at the conference, I said, okay, so what on earth are you going to do in the next recession, which you're walking into right now? And she was like, well, we have some room to move rates, and, we have forward guidance, and I'm like, and some more quantitative easing. I'm like, really? You don't have that much, right? What are you going to do? Go to 3% negative rates? And the change at the head of the ECB is going to show us that the likelihood is whoever's in that role next is going to have to negotiate a bankrupt banking system and how fiscal stimulus can deal with it. So it's going to become politicized. They're going to have to get all the governments together and agree solutions that ordinarily would be the jurisdiction of the ECB, but the ECB is going to have to act on the behalf of the government. So it's going to get a really interesting phase what they have to do, which is another reason why you want to own cryptocurrencies and gold in some of this environment once we go into that recession.
Yeah, and even just on what you've said then, the whole bluffing and the confidence game that everything's going to be all right, it's fine. There's just no truth in the system anymore, and the Fed come out and get underarm these questions at every meeting. It's the same in Australia, and I think that's why millennials are so angry. It's just like, there's no honesty. Just tell us that it's not good or whatever, and that's why we see these yellow vests, anti-establishment movement. People are so passionate about Bitcoin. I've never seen anything like it.
No, and again, this is the reason we set up Real Vision. We just said people need to have honest, unbiased information. And we come at all of this with no bias because we don't have skin in that game. I've got my own views, but we'll have all sorts of different views on just because we want to expose people to the understanding of the risks that they're taking and the opportunities that could be out there. But they have to know and that was the Occupy Wall Street movement. It was that whole feeling of you're not telling us. And people do have a right to know more information. And yeah, it is ugly. It's there's no real way of sugarcoating how difficult a world it is right now. We will get through it, but in what path we take, I don't know.
I think people are well aware or across what happened in the GFC now, and there's all these great documentaries out there and whatnot. So again, I don't think it's going to be politically acceptable to do QE5, or I'd even be interested to see what people say in Australia if they're going to save the housing market and benefit. We know that it leads to inequality. Even the Fed sort of admitted that now. So I think people are across these issues.
Yeah, I mean, so the next big thing is MMT. So, and the idea behind that is let the government print as much money as possible for the central bank prints as much money as possible to allow the government to spend on infrastructure. Now, I think that's very good for some countries, and it may help, but the problem is at what point is too much debt too much debt? The Japanese have shown you can go quite a long way, but at what point does it stop everything? And that is the question that people can't answer, is what happens when you've got so much debt and you either get inflation or the market loses the faith in the ability of the debt to be paid back.
Yeah, and for people at home, that's modern monetary theory, and it's interesting in Australia because we've gone through a lot of prime ministers lately, and we can't get any good changes passed. They're butting heads, but our government actually has pretty low debt. They're so obsessed with the surplus, and they're actually pretty close to it with iron ore at record prices and whatnot. So at a time when our government maybe should be spending a lot more, they're obsessed with that surplus.
So my view has always been that the Australian government's going to end up with the banking sector debts on its balance sheet, because the banks have taken too much risk, and that manifests itself in the housing bubble. So the banks have got the risk. It's going to eventually come home to roost, and the central bank or the government will have to take it on to its balance. We've seen this book play before, whether it's Japan, whether it's Europe, whether it's the US, whether it's the UK. There's no real reason Australia can get out of it unless it draws that lucky card yet again.
Yeah. So you probably know about the big four banks, and in our documentary we covered the second tier as well. And one of them, I think it was Macquarie, is 900% exposed, their mortgage books, to their market cap. It really is crazy. Yeah.
Yeah. No, it's terrifying.
So, what else? What else do you see playing out in the current macro environment and our obsession with growth? I guess, Raoul. Again, it's one of these things where why do we need everything to always be growing with this finite planet, and are we going to have this, go back full circle to this word sustainable, which might surprise a lot of people?
I love that question, and nobody ever asks it. I'm a firm believer that growth doesn't count. I remember going to see the Swiss National Bank, the SNB, maybe 15 years ago, when I was still running a hedge fund. And I said, so this was back in the tail end of the 2000 recession. And I was speaking to them, and I said, well, what do you think? What are you going to do? He said, well, we just try and keep our currency as low as possible because it keeps appreciating. And we're too small to care, so the US won't pick on us. So we'll keep doing that. He said, but the real thing is here in Switzerland is we don't really care about growth. He said, because we're rich and we have money and we have savings So if we can just maintain that, you don't actually need growth. You need to manage your population and need to manage the allocation of resources. And amongst that, you can still create something that's dynamic. That doesn't mean you can't make money. You don't need to grow all the pie. The pie can shift around as, old industries die out, new industries come, the pie shifts around and plenty of people can make money and capital can get destroyed in the process. And there's nothing wrong with that. So I don't think net we should be pursuing growth for the sake of growth. I don't get it. Because I don't necessarily think it is real growth. Because once you adjust it for the amount of money that gets printed, or the debt that gets created, or the inflation that gets created, trend rate of growth is basically demographics plus productivity. And that's how I think of it.
Is that your model? I guess I really love some of those Northern European countries. They've got good healthy diet. They've got good values. They're not consumer driven as much as the US and Australia, I'd argue. They let the bankers fail in Iceland. The renewable energy, I really like a lot of things they're doing, and it just seems like I wish Australia would do the same.
Yeah, and I'm now spending more time close to the US and in the US, and it's remarkable because in the US you've got the split between California that wants to do all of this, and then the national government that doesn't want to do any of it and wants to walk away from everything. The UK is kind of a halfway house. Canada's a bit split. It's a really weird world right now where people don't want to be told what to do. They don't want to pursue a different path, but it's clear that the path we're on is unsustainable, which plays back to what you were saying, is people are just bloody angry about all of these things. Now, but people are also angry about, I got involved in climate change Twitter by mistake. And, I spent a long time trying to get into what people was upsetting them about the fact that it could be man-made environmental change. And really it came down to, I don't want to pay more gas in my car, or I don't want you to raise taxes on me. That was it. I'm like, well, that's an incredibly selfish view, because imagine if it is right and it is going to destroy the world and we can do something about it. Why would you not take that bet? So anyway, it is a very complicated world, but I'm a bit of a believer, I think, in that growth at all costs is not the most important thing.
Yeah, and do you think governments are starting to spin that narrative? We've seen Brexit and Trump and the move away from globalism to we've got to look after ourselves. Do you see that theme continuing? Or?
That nationalism theme, and I think this may be a larger theme that's been playing out since the collapse of the Soviet Union, or maybe even the British Empire. Because what you've seen is that British Empire was the largest empire the world had ever seen. It then collapsed. Then the next largest empire in the world at the time was the Soviet Union. That then collapsed. And what you've seen then is fragmentation, even in countries such as the UK, where you've seen Scotland trying to depart. You've got Ireland. You've got all that issue, and then you've got Europe itself, which was the opposite. That was the big construct that went against that narrative. But even that's now trying to go the reverse. And within it, European countries trying to split from the countries within Europe itself. So Catalonia within Spain, and the Basque Country within Spain, and maybe Bavaria out of Germany. And there's a number of different places that have unrest, in Italy.
Yeah.
So I think there's nothing wrong with that concept of going back to smaller countries. And if you think of a world where we've just been talking about cryptocurrencies, of which you can have numerous currencies, the world used to be like that. All we have is an anchoring bias on anchoring recency bias on what we know, which is few currencies and few countries, large blocks. But we could go back to a more fragmented world. And I think it'd be a more regionalized world. So less globalism, more regionalism. And I think it takes a while for the world to adjust to that. I think it's a very complicated state of affairs to get from where we are now to that. But it seems like that's where we're going. And that'll be okay. That probably as a system can last us another few hundred years.
Yeah, I want to get your thoughts finally on Bitcoin and cryptocurrency. And we see a lot of people, of your peers, Raoul, that are just so against it and, calling it rat poison and whatnot. And then I know you guys have been pretty open-minded for a number of years now. And I think recently it's probably even grown on you even more. You think, geez, this does have a place. So I love that you guys are talking about it more. So how do you see Bitcoin and cryptocurrencies?
So I first wrote an article about Bitcoin and bought Bitcoin back in November 2013. At $200. So that's when I first got involved. And I wrote an article that got circulated a lot because I calculated the supply above ground supply and below ground supply of gold,
Yeah.
and the above ground supply and the below ground supply of pre-mining and non-mining supply of Bitcoin, and imputed a value that it was 700 ounces of gold, I think was what the fair value of the Bitcoin was. Yeah. So that's about $1 million, about the same today, actually, as it. And so I looked at that. I thought that, okay, that's super interesting. So I've been a big believer in it from the beginning, but I got out when I started seeing all the forks. So this was in the middle of the run-up. I got out and thought, okay, look, I don't understand these forks. I'm worried about where they're going with all of this.
Yeah.
But now I'm becoming more convinced as I started spending more time looking yet again at who's developing what. And I'm starting to see how fast this is going. And I've known that, and I've been writing about how fast it's coming. I just wasn't involved in the currency for a while. Okay, now I'm back in again. Yeah. What's really interesting for me is I come from the macro world. In the macro world, they're very futuristic thinkers. We have to live in the future and kind of impute probabilities back to current day and how you get there. What's interesting is Dan Moorhead, who was a portfolio manager at Tiger, which is where Julian Robertson was, where we talked about before, one of the most famous macro guys in the world. So Dan was the first. He formed a macro hedge fund called Pantera, and then went, actually, I've just seen this Bitcoin thing. It's the biggest thing I've ever seen. This was back in like 2012, 2011. Yeah. And he set up that entire business, Pantera. Then people like Mike Novogratz, who's a really famous ex-Goldman partner, trader. Yeah. He caught the bug. Mark Yusko, a good friend of mine, another macro guy, he caught the bug. And then we're seeing John Burbank, an incredible macro thinker, one of the best macro hedge fund manager. He caught the bug. And they're all going and saying, okay, the bet is so obvious and so large and so disruptive that the risk reward is so enormous that why do anything else? Mm. And that is, and another friend of mine, Dan Tapiero, who spent a lot of time on Real Vision. All these guys have been on Real Vision one by one. Dan Tapiero is a classic old school macro guy. He's gone, no, forget this. This is the biggest opportunity I've ever seen. Yeah. And he started a gold business as well, but he sees this and is like, okay, Raoul, everything's changed.
It's just so asymmetric. And yes, there's people with other interests. I think Warren Buffett owns a lot of bank stocks and things like that. But I've never met anyone that's intelligent, that has taken the time to learn about Bitcoin, that hasn't been bullish.
And I'm not necessarily only interested in Bitcoin. I think Bitcoin, there's a fantastic guy on Twitter I discovered. I don't know if you found him yet, a guy called Plan B.
Yeah.
So he's built this incredible stock flow model of gold and Bitcoin and silver and palladium, platinum, proving exactly that Bitcoin is acting exactly as a reserve asset, as a short supply, high demand asset. So that's super interesting, and it projects future pricing of $1 million plus based on the supply and demand of Bitcoin. But the whole I don't know where I was going with that, but the whole idea, yes, where I'm really going is digitization is the big trend. So if we think of the big mega trend here, is everything we know is going digital, literally everything. So there's the digital recording of everything, which is the blockchain. Okay, there are other ways of doing it too, but blockchain is a very good way of doing it, extremely good, and it doesn't decay. So digital assets don't decay. So you need something that stores them forever as well. So blockchain works very well for digital assets. All the cryptocurrencies, Bitcoin could be the store of value currency, for example, and there could be a stable coin, which is the payment system, and there could be a number of other ways. Yeah. And not everything has to be crypto either. India's had a huge experiment with payment systems, which are extraordinary, what they've managed to achieve outside of using blockchain. So, okay, but that digitization thing, and then you look at the ownership of digital assets and the digitization of things like there's worlds out there like Decentraland, which have been created. Super interesting. Look, they're early phase yet, but if you go into Fortnite, you watch a kid in Fortnite, the massive video game, things have a value for kids in Fortnite. The real world and the virtual world are blended. So you and I may see a value in a car, but I tell you, the 14-year-old now who's playing Fortnite, he'll buy the skin or whatever it is in that game because it is perceived value. If you think of like you're wearing a Ralph Lauren T-shirt right now, jumper right now, and that is not just because you're cold. There's a certain thing in fashion and tribalism and all the stuff, right?
Yeah.
Now, that still applies online. So if you're online, you will pay for the equivalent of the Nike trainers, or whatever it is, your Ralph Lauren sweater online, because that is your online identity. It's weird. We don't get it because it's not of our generation. So that whole crypto, Bitcoin, blockchain, the whole thing is all coming into this super trend of everything is going digital.
Yeah, we just
and
did.
It's the digitization of value.
We just did a gaming week about wax and skins and this virtual world, and I kind of grew up on the edge of that gaming, but it's even bigger than I could imagine. And you start to think about, are we going to live in that virtual augmented world?
Esports.
Yeah.
I mean, esports. I mean, so you've got currencies for that and the value of that, and how do you create it, and how do you create it on a globalized basis? Because there are no borders on the internet. So therefore, currencies are clunky. Yeah. So you need something that's currency-less and frictionless that can operate and last forever, because things in the digital world last forever, but things in the physical world outside of gold, literally nothing lasts forever.
So yeah, personally, I am invested in about 2 or 3 dozen cryptocurrencies that are trying to disrupt different industries. That's how I've structured my portfolio, and I'm definitely most heavily weighted in Bitcoin and Ethereum, because I just think decentralized systems in general, what Facebook and Google have done, have just opened the door for decentralized systems.
I agree. Now, so I'm thinking, and see what you think of this, I'm thinking of, in a simplistic terms, Bitcoin is gold. I don't think Bitcoin has as many uses as, it doesn't need to have as many uses. I think it works very well as gold, essentially, which was, if you go to the original Satoshi Nakamoto piece, he basically talked about that. And when you go back to Nick Szabo's original piece, he was talking about that. So I think that is a dead right. And it feels like Ethereum is silver. Because it has industrial applications and store of value applications.
Maybe. I definitely see it more as oil of the world, of what everything will be running on top of, to be honest. The way I also see Bitcoin, as you described, the sort of the bond market before, or the base layer currency on top of what derivatives and everything else are built on top of, I see Bitcoin as the ultimate hard finite asset, and it's going to absorb anything in the world that's previously been a store of value. Why buy heaps of real estate? Why buy heaps of artwork if you know you can park money in Bitcoin?
Yes, the problem is it needs to go up a lot before it gets less volatile.
Yes.
So that it's a real problem for the asset. It's great for speculation right now, but its use is really limited because of that. That going up is fabulous. It goes up 20% a day. It's actually its downfall for that kind of base layer, because you can't have a base layer that's too volatile, because the whole edifice collapses around it.
And I think
what's also interesting, however, is this whole trend towards the ability to own everything fractionally. And that's the tokenization of the world.
Yes.
There's the tokenization of real estate and everything else, or cars, or anything you want. It makes fractional ownership really interesting, and you could trade those as currencies in their own right. Super interesting.
Yeah, I tend to agree there as well. I did want to make one more final point about Bitcoin, but it does escape me now. But I think, the second layer systems and the stable coins will be used more as the payment form there as well. But Raoul, any final thoughts? I mean, advice for people at home? Yeah.
Yeah, for me, I'm a macro guy. So, I'm looking right now and saying this is one of the great macro opportunities, outside of some of the bigger themes we've been talking about, is the central banks. We're going into recession. It seems very clear to me, and it's global. And I don't see what's going to save the day. I don't see a big Chinese stimulus. I don't think the Chinese want to play games and help the rest of the global situation. They certainly don't want to help the US. We've got tariffs. We've got a number of reasons why corporations are going to have to retrench spending and decide how they're going to operate in this new, less globalized world. We have interest rates that rose too fast for most people to deal with, which we're now seeing the backside of. And we have a number of asset bubbles. So looks very much like we're going to recession. And it gives you a home run opportunity. And the home run opportunity for me is just owning bonds. I think bond markets everywhere go to zero and lower. So, if anybody likes simple, straightforward, simple way of trading and investing, just buy bonds. And if you can trade with leverage, buy bond futures, or just get any leverage, or buy options on bonds, because I think it's a killer of an opportunity. And I've been in that trade for 9 months, and I think that continues over time as the Fed particularly go to zero rates. And the next phase behind that is I think the dollar goes up, because there is $13 trillion of foreign dollar denominated debt. So this is people who've created dollar debts and have other currencies. So let's say an Australian corporation who's issued US dollar debt. That's going to have to get paid back in this downturn. And if the dollar goes up, it forces people to buy back their own dollar debts. And the interest rate issue has made it very tight for people. So I have a feeling the dollar goes a lot higher. So I think the Aussie dollar goes to 50 cents. And I think that, the euro goes to 70 cents against the US dollar. And I think that the pound goes to parity to the US dollar. So I think there's a huge move to come. I could be wrong. I'm waiting for the breakout. But those are the things I see coming. And I think people at home need to think about this, because these are real, and you're not just in Australia. You live in a globalized world, and there are some big issues coming down the track, and that's why, yes, Bitcoin and gold also makes sense in that environment.
And that's the US dollar milkshake theory that there's some good videos on Real Vision about as well.
Yeah, absolutely.
Well, Raoul, it's been absolutely fantastic, even better than I could have hoped for. So thanks so much for joining us today. And
yeah. So another quick thing is we've got 2 weeks of programming where I'm going to go and test my hypothesis about a recession on the smartest people in the world. So we've got the most famous hedge fund managers, we've got cryptocurrency people, we've got gold people, I've got just everybody, and people who disagree with me. It's going to be the best 2 weeks programming we've ever had on Real Vision. That's coming up in a couple of weeks' time. So if people want to check it, there's the free version, which is realvision.com/free, or realvision.com, and it's $180 a year. You'll love it, or the YouTube channel.
And I'll put that in the description below, guys. So thanks so much for joining us today, Raoul.
Not at all. I loved it. Thanks very much.
Thanks, guys.